Okay, boys and girls, exciting day today. Definitely was. It's the 9th of July. If you've been through the channel, you'll have seen that we started a challenge with 200 quid in January this year. Did it for the guys in the squad, and they've seen the journey pretty much day in, week out, right the way through from January to now. And the idea is you do like a 30-day challenge, which builds up a little bit of an account. You farm that over into something else so that one account's paying you, then you just put it in a bit of prop so it can pay you. And if the prop goes wrong, it doesn't matter because it's farmed money anyway. But you can then also try and hang on to it and let it run as long as possible. And the idea was to get to £10,000 within a year. Well, those who've been watching this knows I actually smashed that. I smashed that quite a while back. What we've actually done is this. It is up to 15,000. And that's what's in that. I'll just pull that across. You should be able to kind of see it. 15,000, which is there. That's the target. It's just tipped over 100% today. 15,101 with one of the payouts being paid into the account today. So I am more than happy with this. I've actually upped it. Targeted 15k, hit it on the 9th today. I've upped the target, and what I'm going to do is I'm going to put that to 20,000 for the end of the year. So purpose of the video is really just to keep you up to date with what I'm going. So when you see this figure here of 75, it's like, hold on, you were doing well the other week. Well, we are doing well. We just upped the target. But what does that do to the portfolio? Because this portfolio is where I hold the trading funds. It's where things go in. I'll show you the transactions in a minute. But what you can see over the course of the last year, I've actually been able to contribute into this 28,719. And these are all my trading profits just being harvested back into here. Take out what I need, put it back in, and just keep on going over and over. Now, one of the insights that I think is really good to look, you see, I don't hold a lot of cash, if any, in this. I put them all into some form of instrument that while it's there, it's making money. And as you can see, this is the weighting of it. So they're the top 10 investments that I have. So I do have Nvidia and Apple and Microsoft, all these sort of big companies that you hear about all the time. They're in the investments, and then you've got your sector allocation. And then there you go. Over the last 3 months, I've been able to put in nearly 9 grand into that small account. You see it go boom, 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 boom all the time. So what is it? Where is it? Well, if I drop this down onto here, we will be able to see it. So we'll look onto the overview into the investments, and then there you are. So we've got a couple hundred quid in the cash. So the cash and this part here, which is the emerging markets part of the portfolio, that's at 14,903. Add it to the couple hundred quid cash that I've just put in this afternoon. It's topped 15 grand. So I'm really happy. And then just drop your transactions in. There it is there. That's how much I've just dropped in, that 193. And as you can see, all these, I'll just drop this back. Every time I'm cashing something out, and you see me do it all the time. I cashed out the Bitcoin BlackBull because I got it up 500 quid, I booked it off to the lodge, drew the money out, and there's the balance of it here, harvested over into something else, and away we go. But there you go. There are all the profits from the trading accounts getting dumped into here over and over. Now, they're not big amounts, and you see me trade all the time. You go, you're only making a couple hundred quid. Well, what you got to remember is all those couple of hundred quids add up. And that's what you've just been looking at. So earlier on today, and it's another reason why it's pulled up, I did a scalp on euro dollar. And it was a 5 pip scalp. Got about 67 quid out of it. And I got a message off somebody saying, it's all well and good, but 67 quid's a waste of time. It's not. not when you start harvesting it into something else. It's little steps forward. What you've got to remember is, if you've got a couple of accounts, you can have an account for your wage, so you've got to trade for income. But if you've got a prop account to the side of it, why can't that just be savings? And if it makes 50 quid a day, that's a pretty good set of savings. So you're not trading that one for income. Then you could have a third one that is a swing trade. And that one, again, can be for savings or long term. Just something for you to think about. You know, always remember, little bits add up. And not only do they add up, once they're collectively put together, they become meaningful. And then that makes you want to do it again. But as long as you don't get greedy and you continue the same sort of style of trading, sky's the limit, because your position sizes increase slightly. And if they're increasing, naturally your profits will increase. Case in point, let me just drop that back a second. I'll just quickly show you something. Because one of the experiments that I'm doing is this. I'm really proud of this thing. I'm 13 days in, and it's making 1.5 every day. And again, it hasn't really lost. The trades are done by about 8, 9 o'clock in the morning predominantly. The decent returns, but as long as I don't try and push the board, that'll just naturally grow and grow and grow. And yes, it's a relatively small balance, but as long as I control it, in 3 months' time, that'll be a half decent balance. So it'll become a snowball effect, which is exactly how that Vanguard was built in the first place. Little steps that get bigger each time. First month, 2 months is terrible, minuscule, and a lot of people fall off the wagon. And they fall off the wagon because they don't want to do it. They don't want... How do I put this delicately? Well, not even delicately. How do I just put this? They don't want to do the work. They want the return straight away. And so much so, they then push it too hard. And when they push it too hard, inevitably what happens to it is it just falls on its arse. It just literally falls on its arse. And if you look at this, sort of, there it is. There's its equity curve straight up. You know, how many trades has it done up to now? So out of them, there's 31 trades were in profit. 33 of them, or 31 out of 33 were in profit. 94% hit rate. Okay, 1.5. So the strategy makes money. We know that. I break trades, so that will always be out of whack anyway. So I don't care about that. What I care about is that and that. As long as those two are in check, and I need that one to be above 65%, and I need that one to be above 1, as long as they're in ratio, I'm good. And that's it. You know, so if you want to make money in this industry, pretty much forget everything you've learned. Forget it all. You know, a lot. I might expand more on this in the coffee with Scruff. But when you see all the terms, oh, liquidity grab, is it? Couldn't care less. You know, oh, it's a stop hunt, is it? Couldn't care less. Pin bar, couldn't care less. None of these terms mean anything to me. There are high and lows, because if you're having liquidity grabs and it's grabbing liquidity here, right? That means it's going to grab liquidity down here, so it'll just do that all the time. The market will never go anywhere, so that's just stupid, right? It's just an area of interest from a high and a low. That's it. The market can do 3 things. It'll go up, it'll go down, it'll go nowhere. Don't try and over predict it. Don't try reinvent the wheel. If the market is moving up, you're buying it till it tells you otherwise. That's it. And if you do that and you stick to simple principles of that's a key level that was formed in the past for a good reason, not like on a 15-minute, because that means jack shit, right? Good level. Well, then that's a good target. Do you know it's going to hit that? Of course you don't, because that's the future. But at least you can look at the past and have a good idea of what was going on. And then just look at the best indicator that's on the chart. And there is one indicator that trumps everything. The price. Keep an eye on the price, what it's doing right now. So you look at an hourly candle and then you try and see what it's going to do in the next hour. Break that hourly candle down into 4 15-minute segments so you can see what the DNA of that candle is. Do a count back on a 5-minute. See where the current candle is, if it's red, green, whatever, versus 5 candles back, which is the sentiment that it came from. And then you've got 3 in the middle, which is your rolling 15 minutes to work out where a fractal or a range cluster point is. These principles have been around forever and they still work, and they work for a reason. Simple as best. Anyway, there you go. I was just all excited because I hit the target today and I just wanted to come and tell you. Anyway, catch you soon.